Hi, and welcome. This is Sandra Schwartzman, and I'll be your host for today's webinar entitled Ready for a Mortgage. Joining me today is Kevin Holton, Senior Mortgage Loan Officer for AAFMAA Mortgage Services, and he will be sharing just about 30 minutes of slides for you today. At the end of the presentation, Kevin will answer any questions you may have. Please ask your questions by typing them into the questions block on your screen. This monthly webinar series is brought to you by AAFMAA Mortgage Services, LLC. We are a wholly owned subsidiary of AAFMAA, offering a full spectrum of mortgage products to the military community. Currently, we conduct business in Alabama, Connecticut, Delaware, Florida, Indiana, Kansas, Maryland, North Carolina, Oklahoma, Pennsylvania, Rhode Island, Tennessee, Colorado, and Virginia, and we will continue to open offices in states across the country. The AAFMAA Mortgage Services team consists of state-licensed loan officers. Among all our professionals, we have decades of both military and industry experience. We are an equal housing opportunity lender, and for your record, our NMLS is 1423968. As a wholly owned subsidiary of AAFMAA, we operate with the same values and priorities of our parent company. AAFMAA stands for American Armed Forces Mutual Aid Association and is the longest standing not-for-profit association that empowers military families with affordable financial solutions. We accomplish this by being the premier provider of financial planning, investment management, and trust services for the military not-for-profit. This presentation is educational. It is for general information only and is not specific investment, legal, or tax advice for any of you individually. Do not rely on this presentation alone to guide your home purchase decisions. Since each individual situation is unique, the type of loan that benefits you the most will not necessarily be the same as another current or former service member. For individual advice, please contact us directly. We produce this webinar series in-house with our own professional staff as a service to our members and to help them better understand the resources that are available to them. I will now go ahead and turn it over to Kevin, who will go over the agenda.
Good afternoon, everybody. Hope everybody's having a great day. Thank you for joining us in our webinar that we're having here this afternoon regarding and included in our mortgage series that we're offering each month. Today, basically, we want to go over some basic knowledge for everyone, and that includes whether you're a first-time home buyer or maybe a seasoned homeowner who is looking to buy a second or third home or even refinance your home that you currently live in. But basically, today's agenda will be getting you well prepared for that mortgage that you're about to apply for. And as you can see on our agenda, we have multiple topics that we'll cover today. And as Sandra said, at the end, we'll have some questions and answers if you have some. Some of the topics that we're going to go over today is why. Why do we need so much information up front? Every loan is different. Every customer is different. Their situation is different. Every home is different. So every loan that we look at every day is going to have something different in it. We'll talk about why the VA loan and conventional loan, there's different documentation that's required in those particular loans. So the information that's required is going to be different. Why does AMS require so much information? We'll talk about that. Is refinancing a good idea for you at this time? Sometimes it is, sometimes it isn't. So we'll go over some of those details. And what do you need to do to protect yourself? This is the home buying process, and that collateral that you're buying is probably the biggest investment that you'll make in your lifetime. So we want to help you protect yourself in everything that you do in the process. BLUF. This is our acronym for bottom line upfront. You'll hear me probably say the word upfront many times during this webinar because we like to do business that way here at AAFMAA. We're going to ask for a lot of information up front. That way it'll help solve the problems that could arise during the process and during the before you get a closing on your new home. Now, our class today is to build upon the other classes that we've provided in the past and the ones that we'll have in the future. Our goal is to educate all of our AAFMAA members and fellow veterans so they understand the mortgage process and are able to get the best deal possible when they're trying to refinance, purchase, or build that new home. And yes, I did say build a new home. We do have a new construction product, so give us a call and we'll talk to you about that product. Remember that things change all the time in our industry. And when you plan on getting a mortgage, one of our licensed mortgage professionals here at AAFMAA, we're here to help you. So pick up the phone and give us a call. Now, things have changed in our industry in the last decade or so. Everybody knows that we went through a horrible time about a decade ago, back in 2008. We had a mortgage meltdown and a financial crisis. Well, due to that crisis that we all went through and experienced, there's a lot of new rules and regulations that have come about. Now, these new rules and regulations did create a lot of new paperwork that's required from us as your lender, but it also required of you as the customer. So we'll talk about some of those things. And we get asked the question all the time, why do you need so much information? Well, part of that is because of that mortgage meltdown and financial crisis that we went through. But it's also due to an underwriter. When an underwriter is looking at your information, they might see something in your file that it's a bit off or out of the ordinary, and so they might have some new questions or triggers that then to have some red flags. They might ask you some additional questions and or needing some more documentation. What we do is we try to ensure that we have a good file put in front of the underwriter. So we ask a lot of questions up front. We take a look at your file. We ask for certain documentation that we'll go through here in a little while because we want approvals. We're here to make loans to get you into your new home or to refinance your current home. We don't like denials. So we try to scrutinize a little bit more up front. That way we're not having to do it on the back end. Now, our purpose of our briefing today is to provide a high-level look at what you need to have ready when you're getting ready to apply for that mortgage. But you do have to remember that every case is different. Every customer is different. That means you might have to provide less, more, or maybe some indifferent information based on your situation. So our upfront information. We actually ask our customers to shop around. Kind of sounds crazy, but in today's world, we like for customers to have at least, two offers on the table so they can actually view what kind of rate am I getting, what is the closing cost for this particular lender. It does create a healthy competition, but we find that we're one of your more lower rates and lower cost lenders out there. We provide the best customer service. So I think you'll find that when you're shopping with your current mortgage company or your bank down the corner, we would ask you to give us a call and give us a try. Now, no matter what mortgage company you do go to, there's some basic information that's going to be needed. I always like to start this spot in the presentation with saying that when an underwriter looks at your file, they're looking at three things to qualify you. And I call them the 3 C's. It's your credit, it's the collateral, and it's you, the customer. And there's different things under each of those headings. There's different items that their underwriter is going to be looking at and requesting information. Your credit history, probably the most important part of the credit file or your personal file when it's in front of the underwriter. Do you pay your bills on time? And what's your credit scores? A lot of the mortgages and other loans that you might get out, your car loans, your credit cards, are all based off of those credit scores. So it's good to have a good credit file. You, the customer, we're going to be looking at your income. Can you qualify for that new home payment that you're trying to get? So we're going to be looking at things like your current bank statements, your income, your pay stubs. We ask for 2 years tax returns for most files because we're going to be checking out your debt ratio. For the collateral part of the 3 C's, we have to get an appraisal on every file, most files, and they want to take a look and make sure the house is in good shape. Did it appraise for what the purchase price of what you're trying to buy it for? Or did it come in really low? We have to look at things like that. We've got to make sure that you have homeowners insurance on that piece of property, just in case a disaster happens. It protects you and it protects us as the lender. If you're applying for a VA loan, we will ask you for your DD-214 to see your service dates and your certificate of eligibility to make sure you do have your VA eligibility, and also to see if quite possibly you might be exempt from a funding fee. Some more upfront information. If you tell us that you own a business or a consulting firm, there'll probably be some additional information that we're going to need from you. For example, possibly your business tax returns for the last 2 years. But these are all information that we'll need upfront. As I stated earlier, every loan is different. Each state is different. Each state has their own guidelines. Each state has different costs when it comes to closing your home loan in that state. Certain things that are different in states. Some states, kind of like Florida, most of Florida, if you own a property down there, you're probably going to have to get flood insurance. If you're in any coastal area in the United States, you're probably going to have wind and hail coverage. So these are added costs to you, which could, again, affect your debt ratio and you qualifying for that home loan. Everybody's credit score is different. Everybody's debt ratio is different. But the better credit score that you have and the better debt ratio you have, the less probably additional information that the underwriters would request from you. As you get with some of our customers with the lower credit scores or your DTI is high, probably some more documentation is going to be needed, or explanations on maybe those late payments that you might have on some credit cards or auto loans. If you've been through a divorce or a separation, the underwriter is most likely going to be asking you for a copy of your divorce decree and your separation agreement. What they're looking for there is to see if you have any sort of alimony or child support payments that you make out every month, which again goes back to affecting possibly your debt ratio and qualifying for that loan. So these again are some of the things that we look for up front. If you've had credit issues in the past, bankruptcy, foreclosure, short sale in a prior home, if you've had unpaid VA loans or any sort of government debt that you've gone bad on, student loans, charge-offs, things like that. These are reasons that an underwriter might need some additional information and some explanation from you, the customer. Not only do we do, the majority of the loans that we close here at AAFMAA are veteran loans, but we do offer other products such as conventional loans and FHA loans. You might be a veteran that has your VA eligibility tied up on your primary house, but you're interested in buying a second home or possibly a rental property. In that scenario, you would have to probably select the product of a conventional loan. Now, there are some differences between your VA and your conventional loans. One of the most important differences is the appraisal. Now, we have to order your VA appraisal through our VA portal, which then the VA actually selects the appraiser, and they'll go out and do the inspection on the house. Now, these appraisals are more detailed and protect both you, the buyer, and us, the investor. So they scrutinize a lot heavier than your conventional appraisals. And again, it's to protect you, and it's to protect the VA, and it's to protect us. If there's any sort of repair work that needs done, some deferred maintenance, most likely the appraiser is going to notate that in the file, and you will have to get that work done before you close on your loan. All VA loans must have an escrow account. That's for your taxes and insurance. Part of your monthly payment will be supplying that escrow money all year long, so when your property taxes and homeowners insurance are due, they'll have enough money in there to pay that every year. Now, that's different than a conventional loan. On a conventional loan, you actually can waive your escrow and pay those items on your own each year. If you have any past issues with VA loans, any kind of defaults, collection, charge-off, things of that nature, that'll get kicked in our system, and you'll actually have to make arrangements and pay those debts off before you close on your loan. There will be some additional items that we'll go through in another slide, but VA does require some separate disclosures as part of their disclosure package than conventional. But at the same time, your credit history, your income, things of that nature, they're the same between your conventional and your VA. We look for basically the same information. One thing that does vary sometimes between the conventional and the VA loans are the loan limits on what's considered a jumbo loan. So you can check with your loan officer to find that your city and state and county, a lot of those limits are different in each state. Now, why does AMS ask for so much upfront? We discussed that earlier, but really the reason that we like to do it here at AMS is we like to provide a realistic assessment early in the process. We've worked with members who have gotten a new mortgage with us that told us stories about when they applied for a mortgage down the road with another lender. And we're surprised when the lender told them they only needed 3 things to get their loan approval, and found out 60 to 90 days later during the process, when that company kept asking them for additional information, finally to find out that at the end they got denied on the loan. How could this happen? Well, we like to solve those problems up front. So again, upfront information. We try to get as much information up front to solve any problems and to make sure you qualify for that loan before your loan even gets to the underwriting table. So we pre-underwrite our files. We look at your documentation, things like your credit, your COE, your disability, before we quote a rate sometimes. We want to make sure our rate is accurate and you know all the information up front, and you know that rate is locked in before you close your loan. Lenders that require more information have less risk, so we can offer a better rate than those that require less and have, for the most part, higher rates and higher offset risks. Some of you probably heard the term subprime mortgage lenders and alt-doc lenders. That's what we're talking about right there. So here's the next slide is our list of actual information that we will need on every loan. So whether you're doing a VA loan or conventional loan, we are going to ask for some basic information that we'll need from you. One of those items is your signed 4506T. This item is a form that we actually send directly to the IRS, and basically the IRS will send back your tax transcripts. What we want to do there is make sure that you are a tax-paying customer, then make sure that you don't have any tax liens, or you might be under a payment plan for some old taxes that you owe. If you're a self-employed customer, we basically use those tax returns to figure out your income. And we look at things kind of like if you have other properties, some rental properties that you might own that you file on your taxes. Most of the time, we'll ask you for your 2 years tax returns. Now that actually, again, is for self-employed people, but it's also to make sure that what you filed with the IRS is what you're showing us. Most recent 2 years W-2s. At this point in January, we're now looking for your 2016 and your 2017 W-2s. And of course, they'll use that information along with your pay stubs to calculate your income. On your pay stubs, we'll look for your most recent 30 days worth of pay stubs. So if you get paid once a month, up front, you only have to supply 1 pay stub. If you get paid twice a month biweekly, we'll ask for the last 2. Your bank statements. We look for your most recent 2 months bank statements and make sure you include all pages. And that does include the very last page that most people seem to forget to fax to us, which is basically just the bank's disclaimer page. But the underwriter will ask for all pages of those bank statements. And basically we're using your bank statements for if you're doing a purchase on a property and you have to bring some money to closing to pay for a down payment or some closing costs. We want to verify that you have enough money to pay for those items. But we also use it for our members that might be on Social Security, retirement, disability, and those the monthly checks they get are actually direct deposited into their bank accounts. So we use that as a point of reference to show where the amounts that you're getting in each month. In order to pass the Patriot Act, we ask for a copy of your driver's license and Social Security cards. Now, no matter what state you live in, we're actually going to give you the option, and it's your choice of whether to pick a title or a closing attorney to use to close your loan. So this is an item that you can shop for ahead of time. If you're used to doing if you close some loans with a particular attorney, you can give that name and number to your loan officer who will pass it along and will make sure that that's who you close with. If you don't have a preferred attorney or title company, then we definitely send in our disclosure package a list of those companies that you can actually pick from. All of our VA loans will require a pest inspection, a current pest inspection. So again, you will be able to shop around for that item, or you can choose somebody that's on our list. Every home that we close a loan for is going to have homeowners insurance. Again, that's an item that you might have your company that you use right now, or we can refer somebody to you. But that'll include if you have flood insurance or wind and hail, we'll need a copy of that part of your homeowner's policy too. And if you're doing a refinance with our company, we're also going to ask you for your most recent mortgage statement. Some additional items that are needed if you're doing a VA loan with us, as I mentioned earlier, DD-214 and your certificate of eligibility. Now, if you don't have a copy of your certificate of eligibility, we actually can pull that for you. But one thing that we're looking for here is if you did have a service disability, a lot of times you'll be waived from your funding fee that you'll have to pay, which will save you some money. So we look at that item too on your certificate. If you've had any kind of disability rating, we want a copy of that disability letter, and again, sometimes your year-end statement that'll show that amount that you get per year. The last three items are your VA child care letter, your nearest living relative letter, and your number of household members letter. A lot of this has to do with VA. They not only do they calculate your debt ratio, but they calculate a disposable income that you have left at the end of the month, and that's part of your approval with the underwriter. Is it a good time to refinance or not? Well, rates are still low, but they have been creeping up here the last 30 days or so. Our idea about whether it's a good time to refinance or not is we ask one basic question: is it a benefit to you, the customer? There's got to be some sort of benefit in order to do a refinance. If a customer calls us and says, we don't like ABC company that's servicing our loan and our rate's at 3.5, can you refinance our company to get away from them? We're probably not going to refinance you if our rates are currently at 3.75, just so you can get away from the other company. That's not a reason to refinance. So unless you're getting a cash out refinance, which is a benefit in itself, typically that money's used for a debt consolidation, home improvement, something of that nature. Our rule of thumb is when we do a mortgage refinance, you have to recoup in 3 years or less the money it took to the cost of that refinance. So, for example, we have two examples here for you. Staff Sergeant Jones wants to refinance his home with no cash out. The cost of doing his loan was $3,000. He's going to save $100 a month. Therefore, he can do his refinance because it's going to save him $3,600 over those 3 years, and he's recouped that $3,000 he paid. Example two, Colonel Smith wants to refinance his home. He'll also save $100 per month, but his cost of his refinance is $5,000. He cannot do a refinance because he's only going to save $3,600, and it costs him $5,000 to do it. It's going to take him longer than that 36 months to recoup the cost. Now, keep in mind, it's important to know when the refinance of a home makes sense and if it really helps your financial situation. Our main point is to protect yourself. Above anything else, we here at AMS want you to protect your financial future. We want to make sure that you protect yourself and get the best deal possible. And we're going to try to attempt to do that for you, is to give you the best deal possible. So make sure you understand all the documents that I've talked about in this presentation, know what rate you will get before your closing date, and understand the various expenses related to your mortgage. One thing we'd also challenge everybody to do is when you're ready to put in your mortgage application and you're talking to a loan officer, is to go to the national registry list. It's the website listed here, nmlsconsumeraccess.org. Right there, you can, before you start talking to your loan officer, you can find out if that loan officer is licensed. We here at AMS, we're licensed in the states that we do business, which means we had to go through a rigorous education schedule and tests, and we had to pass national and state tests in order to be licensed in your state. If you talk to a banker down the road, the banker can hire somebody straight from high school or college without any experience, and they can start doing mortgages on day one because they're filed under different regulatory rules and licenses. They actually don't have to be licensed. So you could be talking to somebody that just started and knows nothing about the business. So protect yourself. And Sandra, that's the end of our webinar.
Great. Well, thank you very much, Kevin. That was very informative. While you've been presenting, we've had several questions come through, so we're going to take a few moments to answer a few. If you're still thinking on questions, don't hesitate. Keep typing them into the question box on your screen, and we'll pull out a few as we go. So our first question that we want to address today is, how do credit checks work, and how do they impact my score?
Credit checks. Well, how they work, we actually ask our every applicant that comes to us for a refinance or our home purchase, we are going to ask them to go to our website and put in an actual formal application. So they're going to put in certain information. Basically, we can have as little as your name, Social Security, date of birth, and residence, and we'd be able to pull your credit. We ask for our customers most of the time to please try to put in the long application and as much information as possible, because it helps us pre-qualify you for that mortgage. But basically, part of that online application, there'll be a question that you authorize AAFMAA Mortgage Services to pull your credit. So when you do that authorization and hit the button, we will receive your application, and we'll be actually able to go in there and then pull your credit. Does it impact my score? Very little if we're the only ones pulling your credit. You know, as I said earlier in our presentation, we do challenge people and want people to get at least 2 offers, maybe 2 or 3 offers from another mortgage company. And if you have 2 or 3 inquiries within a short amount of time, you're probably not going to, it's not going to decrease your credit score very much, very little, usually 1 to 5 points. However, if you do go out and try and apply at 5 to 10 different companies and all of them pull your credit within a week, it probably would impact your credit score. So just be wary of how many times you are applying for some, not only just mortgages, but anything that, any kind of credit that you're applying for.
Thank you. Another question came through. You touched on this a little bit in the presentation, but would you mind walking us through again the type of paperwork, or what kind of paperwork do we need up front, and why?
Sure. Well, yeah, as we talked about earlier, we do require certain information. When you're first applying with us for the mortgage, of course, the application itself is going to ask for a lot of information. So, you know, we always ask our customers to have their financial information handy next to them when they're inputting the application. But up front, we're going to ask for a lot of basic things, such as your income, your pay stubs, W-2s, your tax returns if you're self-employed. We are going to ask for your bank information, especially if you have to bring money to the closing. And basically your IDs. You know, with that minimal information, we can typically make a good call on whether we can pre-approve your loan or not without it going to underwriting in the full process. But we do ask for that certain information, and the reason why is to try to pre-approve you up front and make it where there's not going to be any problems during the processing of that loan.
Great. Our next question asks, how do I obtain a pre-approved letter for my realtor?
Oh, great question. Well, yes, when you go out and home shop, most of your realtors are going to want that pre-qualification letter. We offer 2 various forms of our pre-approval. One is a more basic and general form. If a customer is in a rush and needs a very quick pre-qualification because they're at a house and they want to make an offer, we would ask them to go in and put in the application real quick. We are going to have to pull their credit. But as far as qualifying with income and their assets and other items, we just ask them to input the most accurate information as they can. So we'll run their credit. If their credit looks good and their income based off the information that they input qualifies them, we will give them a pre-approval letter. But it will have some verbiage in there that this pre-approval will then need to go through final underwriting, verification of income, assets, the collateral, title work, things like that, of that nature. If a customer is already, we already pulled their credit and they've already submitted those items up front to us, their income information assets, then we'll actually give them a more detailed pre-approval letter, and we'll state on that letter that we have already reviewed and approved their income and assets and things like that.
Great. Well, thank you, Kevin. Those were some great questions that people submitted today. I want to be respectful of everyone's time, so if we didn't fully answer any questions or you think of any other questions later on, please reach out to us at mortgage@aafma.com, or you can email Kevin directly at kholton@aafma.com. We'll go ahead and break here for now, but you can reach out whenever you need to. Please don't hesitate to ask for help. We do this every day for our military community, and it is our pleasure. This weekend, you'll receive a follow-up email with instructions on how to access a recording of this presentation. And you can always register for future webinars and review past webinars at aafma.com/webinars. Speaking of future webinars, be sure to join us in 2 weeks when our team at AAFMAA Wealth Management and Trust will be presenting next. If you found this information useful, we encourage you to please share it with your friends and family. Our membership grows stronger every year because you introduce those in your military community to AAFMAA. Thank you again to everyone listening and for joining us today. We look forward to our next opportunity to assist